Alright guys, welcome to a different video. We're going to talk about how to make more money with trading by doing less and how to essentially stay out of the SMC trap. Forgive me if I sound a little bit sick. It's the early morning and I just woke up and I'm still feeling a little bit ill. So anyways, we're going to get right into it. It's written down right here. You want to make more with less. You don't want to fall for the trading trap, which the majority of traders, including myself, unfortunately, fall for. The well-common trading trap of going in endless cycles, switching strategies, not knowing what to do, not being consistent for more than 2 or 3 months in a row. How to fix that? Well, first, let's address the issue. A lot of people think that learning more and doing more leads to more progress, leads to more profit. And this is pretty logical because in every other area of your life, it works that way. If you're, for example, studying for an exam, the more you do, the more you study, the easier it'll be to understand and pass that exam. So this works basically like that everywhere in life except for trading. Because in trading, learning more and doing more leads to clouding your mind with a bunch of shit that is unnecessary. We're going to take a look at it right now. So right here you see a trade. This is a short trade. And we can see that it's a short trade because, you know, the trend is down and we took a sell there. Simple as that, right? However, the majority of traders, including myself in the past, and a lot of people watching this, will take this loss right here and will analyze it. They'll say, well, there's liquidity there, but there's also liquidity here. Maybe this is inducement. Maybe we should have waited for that resistance zone up there. Maybe this is a poor break of structure down here. We got trendline liquidity, stuff like that. So now all of a sudden you're looking for reasons. And this is the same with, you know, failing your exam and then looking for ways to improve. You're trying to apply the same approach to trading and it doesn't work like that because this is probabilities. This trade could just as well play out. Why? Because it's a downtrend. But the thing is, if you would have won this trade and this would have been a take profit, then there's a really good chance you wouldn't have looked at it like this and you wouldn't even have thought about if there's liquidity there or a poor break of structure, because then you'd be okay with it. So that's the association that you've got to do more, you've got to learn more, and in doing so, increase that win rate, which ultimately also leads to you filtering trades, because now you're going to filter out all of your trades because every trade that has a poor break of structure, you're going to avoid taking that. So suddenly you go from, let's say you were to take 100 trades originally to only 40 trades. Well, you can imagine for yourself that filtering out 60 of those 100 trades means that you're also missing out on a lot of profit. Yes, your win rate may be a little bit higher, but you're also missing out on a lot of profit. And there's nothing worse than missing out on a winning trade because you thought you knew better than the markets. So we're going to continue because I'm getting a little bit off track, but building simplicity. The thing is, it is a game of probabilities. Now it's hard because let's go back here, right? Let's say you take that loss and you're associating it with shit. I got to learn more. There's more stuff to do. There's more stuff to learn. And then you go on YouTube and boom, you get bombarded with the SMC strategy with an 80% win rate or all ICT concepts that you need to master in order to become profitable. Then you also have the 1 to 14, 1 to 16 trades that you're taking on the 5-minute chart within a day. You take 60R in a day. So first of all, that was complete bullshit, right? Every professional trader will tell you this, every hedge fund will tell you this, that anything above 20R, 20 to 30R in a year is an extremely good year. Don't fall for the whole thing about making 60R in a month. That's just complete bullshit. And anyone who tells you that, ask them to show you a verified broker statement, my FX book track record, or something real to show you that they are consistently doing that, because it's literally close to impossible to make 60R in a month with proper risk management. All right, so the association that more analysis leads to better results is incorrect. We know that by now. I analyze for 15 minutes a day, and the simpler something is, the easier it is to consistently execute it. So we're going to take a look at some data of one of our members. This is Bob. He's one of our members. He's collected 1,000 trades. He's got a 36.5% win rate. Now this is extremely solid, but this is a really, really simple edge. The thing is, we'll get a lot of traders who feel like this win rate is too low. So what they're going to do is they're going to try to get that win rate up to 40%. And in doing so, they might eliminate or they might filter out 200 trades, right? Because they feel like they want to get that win rate up to 40%. So now they're going to filter them out. So they're going to look for reasons to avoid certain trades. For example, poor breaker structure or liquidity there, or imbalances at a certain level, stuff like that. They're going to look for reasons. Now what ends up happening is those 1,000 trades turn into 600 trades. Now let's analyze that. Let's say we have that 1,000 trades with a 36% win rate. Now let's say we do increase our win rate to 40% with 600 trades. Let's take a look at the actual P&L that we end up getting once we filter that out for a higher win rate. So the math here is, let me type it out, 1,000 trades. So let's say we won 360 trades in this scenario, times 3R, because we're winning 3R per trade, would amount to 1,080 RR. Now, obviously, you also end up taking 640 losses. So we're going to deduct 640 R from that, because that is those are our losses. You end up with 440 RR net profit. So your net profit becomes 440 R. Now let's take a look at the guy who managed to increase his win rate. Take a look at his P&L. So 40% win rate, let's say he won 40% of those 600 trades, which is 240 trades. So he won 240 trades times 3R, because that's what we win. So we end up with 720 RR. Then we took 360 losses, because 600 minus 240 is 360 losses. So minus 360 RR. And we end up with 360 R in total net profit. So you can see that even though our win rate is a lot higher now, we make way less profit, because we're trying to increase that win rate by a little bit. In doing so, we're filtering out a bunch of setups. There's two issues with that. Now it's going to be harder to execute your edge consistently, because you're constantly having doubts about whether to take a trade or not, because you want to get that higher win rate. And also in the long run, you're just going to end up making less profit. Now it might be easier for profit challenges in the beginning, because you want to pass them fast, so you might want a higher win rate. But in the long run, you're only hurting your net P&L, which is why I really hate the idea of avoiding trades because of correlation, or avoiding trades because they don't look good. So what we got here is literally a 36.5% win rate, 1 to 3R with 1,000 trades. Now this guy has not been trading for very long. So the guy who's been trading for years, like Andre, one of our fellow coaches, might end up with around 37 or 38% win rate, which is even better. Now the idea is that an edge has to be so simple that you can execute it consistently. I'm going a little bit off track because I do want to make this video about why you can profit with less time invested into your charts. So by going back to this screenshot right here, I mean, it's pretty obvious that this is a way easier analysis. We're going down, we're looking for shorts than the one up here. So what I'm trying to say is, don't waste your time learning more about the charts and learning more about liquidity, SMC concepts, and ICT concepts. Because the idea that you're losing money and then having to learn more to become a better trader is just totally incorrect. The thing is, these people know that. The marketing gurus, they know that. So let's take a look at this text that I've written down here. You got to understand that it's a game of probabilities. If you flip a coin and you lose it, you're not going to try to learn a better way to flip the coin. You're okay with losing that. So you got to focus on understanding that the edge, that coin flip, only plays out in the long run. Let's say you have an advantage in a coin flip. Let's say you have a 60-40% chance. You know that if you lose a couple of times, you don't have to look for a better way to flip that coin. You just got to keep doing it. But this is why marketing works so well in trading. Because let's say you face a challenge. Let's say you take a couple of losses in a row. And now a bunch of marketing gurus jump in and they make you believe that they need your strategy to be profitable. That strategy ends up costing 100 euros or $100 a month. And it's complicated because people assume that if something is difficult and complicated, it must work because you become an expert at analyzing charts. Meanwhile, the traders with a simpler strategy are already achieving profits because they simply stuck to it. And we're going to go one more time. For the final time, we're going to take a look at that screenshot. You see that this area right here has just been pure stagnation. had a couple of losing streaks here and there. But the thing is, because Bob, this member, stuck out the strategy for long enough, he ended up with 440 RR within, what is that? That's like 5 years of data, because it ends right here. 4 years of data, 440 RR. The thing is, the majority of people never make it to that point because they'll take a few losses, they'll get into a losing streak, they'll go and analyze the charts, they'll go and look on YouTube, they'll look for ICT concepts or the bullshit SMC concepts that's going to make them profitable, and look for that 80% win rate, which just doesn't exist. And now they're trying to sell you into believing that it does exist. It doesn't. Honestly, don't fall for that. All that matters is that you stick to a simple strategy. You backtest that simple strategy. Don't invest too much time in analyzing the charts. Don't waste too much time on trying to learn all the holy SMC concepts, but instead limit yourself to just 15 minutes a day of chart time. So have very little chart time. Use a simple mechanical strategy. If you want one, there's one free to download on our website, simplemarketsacademy.com. It's easy, it's super simple. It's the one that we've been using in this data down here too. It's extremely easy to follow. So if you do want access to that, it's free to download in the description or in the on the website, simplemarketsacademy.com. Anyways, going a little bit off track, just make sure that you're doing something simple, because if it's simple, it means you can execute it consistently. Now, don't invest too much time in analyzing the charts, because eventually it ends up confusing you and leading to a bunch of unnecessary information, which ultimately leads you to go further over the coming years. So as time goes on, you're literally becoming a worse trader because you know way too much about the markets. Anyways, I hope I managed to get my point across. Thank you guys for watching this video, and I'll see you guys in the next one.